Hey everybody, Sunday afternoon video, and I wanted to make this video because some idiot posted a comment on here uh, saying that my approach in trading is basically to hold on and just to continue buying and selling in the hopes that my average, it goes back to my average. Now that is the most asinine comment I have ever heard in my life, and it absolutely has nothing to do with my approach whatsoever. The fact that, and by the way, that's typical. Somebody saying something like that is coming typically from somebody who has zero skill or zero experience in trading, or has resigned themselves to a very, very unsophisticated approach like crossing moving averages or breaking a trend line. If anyone knows anything about my trading, actually very few of my trades require any sort of averaging. Most of the trades are profitable from a get-go. And the most important thing to understand is that the approach has layers and layers and layers of risk management built into it, okay? I don't use stops because stops are loss producers. If you like losses, if you want to accumulate losses, then use loss producers, which are stops. First of all, you have to understand that my approach incorporates a couple of very important principles. Number one is a fundamental and very deep understanding of the forces that move markets. Okay, this, as you should know by now from my market calls and my discussions, is a rarity. I'm one of the few people, if not the only one, who has combined MMT, which is a concise and correct understanding of the monetary system, and created an applied use for it. Okay, and that's combined with my own personal 40 years experience, or near 40 years, 37 years, as a trader and former member and floor trader on 4 different exchanges. Okay, there is a reason why markets move. There are fundamental drivers behind that. So, number one, if you understand that, if you understand at the very base what creates the movement or valuations in particular markets, then that's like riding a wave. That's like riding a very, very powerful wave. And yes, there's going to be times when markets can move against that wave, just as rivers. We know rivers, all rivers flow to the ocean, but they twist and they turn and they bend along the way. I'm aware of that. A river will follow a certain path. There's going to be obstructions in the way. You don't see rivers just suddenly bolt right through, the bends and the outcroppings of the land, unless something catastrophic happens, like maybe an earthquake, which diverts the flow instantly. And I'll talk about that. That's a force majeure. And what do I do in a case like that? Okay, but first, number one, understand that very few of my positions require any averaging. Number two, with a very deep fundamental understanding of the root drivers of the market, I can stay on the side of this massive wave. Okay, so that is like having almost an incalculable amount of capital or money or firepower, whatever you want to call it, behind you. Okay. Number three, I put together probably something that nobody else has done either, which is a very, very deep understanding of market composition. Market composition means I know, or I can determine where other people are positioned, where they have placed their bets, and also where they are susceptible to margin calls or being squeezed in some fashion or another. Okay? So, knowing this, you have another layer of protection because you literally can use the capital and the embedded positions of other traders, or their what their buy and sell intentions are in your favor. So that's another layer of capital protection or use or injection, whatever you want to call it. It's almost like having, way more money or capital to play with than you actually have. Okay, you have other people supporting your position. Very important. Now, there are other elements in this as well, such as keeping the exposure very, very low. Now, I have had in the past sort of almost ruinous encounters with the market, but I've developed the approach over time and understand that slow is better. In other words, the slow accumulation of profits is much better than I used to try to swing for the fences, and I had times when I could run something up 100% in a month very often. I don't do that anymore, so I keep exposure low. So even in a case, let's look at a case that was ruinous for many market participants, which is when the Swiss National Bank pulled out of that Euro-Swiss peg. You had traders wiped out. You had entire firms from no fault of their own. They just had positions on their books which were their customer positions. Firms got wiped out, okay? My approach in that instance, which equates basically to something catastrophic, would have survived, all right? Now, can something happen beyond that? But anything could happen. I mean, we could be hit with a nuclear device. I hope not, but something like that could happen. I mean, but to the 99th percentile, what I do and the way I do it is to protect the position. All right? Now, a little story. I consider trading as a business activity. If you're a businessman, back in the financial crash, this guy, Sheldon Adelson, some of you may have heard of him. He is the chairman of Las Vegas Sands, LVS, the big casino company. I think the guy's worth about 25 or 30 billion dollars. In the financial crisis, 2007, 2008, his company, which he had built over 40-something years, and I think at that time he was worth probably 15 billion. The company was exposed. Like every businessman, you put yourself out there, you might be levered, okay? You might have real estate interests where you're paying bank loans, you might have other leverage tied to your business, whatever, The company took a massive hit. Did he stop himself out? Did he say, well, it's down, I think I'm just gonna sell my whole company and get out and take a loss? Okay, I could always get back in. You can't always get back in. You cannot always get back in. He held on, and in fact, there was a great story about how he, one day, he sat down with his family and he said, what should I do? What do you all want me to do? And they said, stick with it. He actually doubled up. He went all in. The guy's worth 25 billion now. If you look at this as a business, no businessman who is operating a business uses a stop loss. It's insane. It's ridiculous. So your business is down 10, 15%. Do you stop yourself out? Do you sell your business? Do you take a loss and think, I'm going to get back into it at some other level? You can't. You cannot. I look at this as a business, the same way as any other businessman operating a business. It's just that my products are market instruments, okay? Stop losses are losses. And by the way, in the completely minute probability that I would run into some kind of a ruinous situation, a force majeure, in the meantime, all of you using your stupid little stop losses would be blown out or spinning your wheels and getting nowhere, never able to support yourself, never able to build up any wealth. Okay, how do I know? Because I've seen it time and time again. That is a strategy for losers, and you are a loser. So, to you, Mr. Idiot, who posted that. And by the way, if anyone wants to understand what my approach is, feel free to contact me. Buy my course, the Forex course, at www.pitbulleconomics.com. Click on the tab that says courses, or sign up to MMT Trader, www.pitbulleconomics.com. Click on the tab that says product. But for you, Mr. Idiot, who says that I have a Monte Carlo approach. You don't know shit from Shinola. You don't know what you're talking about. You're a freaking moron, okay? It's not what I do. My approach has more risk management in there than any of your stupid little stop losses. And that goes for anyone else who agrees with Mr. Moron over here. Okay? I've been around doing this a long time. The system is perfected. This idea that somebody, parrots from some stupid book they read on trading with stop losses, they're an idiot. All right? Do your stop losses, and that's loss accumulation. Have fun with that. There's plenty of risk protection in what I do. And it's not about just I buy or I sell and then just hold on and hope. That is fucking insane. That is absolutely has nothing to do with what I do. Okay? What I do is sophisticated. It has many safeguards in it, and it works. It's successful. Period. So all you idiots who think you're so smart and you got no freaking life but to comment on here about stupidity, shit you don't know, get lost. Okay? Bye-bye.